This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A tailwind for Asian stocks as Wall Street posts an 8th straight gain with strong earnings from Meta and Microsoft upending the Sell America narrative. With Apple sliding in late trade as its China sales disappoint and it warns of damage from the trade war, Amazon also bracing for a tougher business climate.
And I'm Paul Allen in Sydney. On the eve of a knife-edge Australian election, the prospect of minority government looming large as voters weigh promises from the Labor government and the Conservative opposition on inflation, housing and the impact of Trump's tariff war.
And I'm Avril Hong in Singapore, where voters also head to the polls tomorrow amid a challenging time for this trade-dependent economy.
And we'll start you off with CPI numbers out of South Korea. Breaking news, we have now the core CPI coming in at acceleration of 2.1% year on year, surprising to the upside. When it comes to the month-on-month number, it's 0.4% gain for the month of April. This coming despite the drop in gasoline prices. Of course, we continue to see the upward pressure from import costs stemming from a weaker won. The South Korea market will come back online today after a holiday, but take a look at futures right now under pressure because we have seen, of course, the acceleration of those gains in the Asian markets, especially with the Nikkei now gaining for a 6th consecutive session for the longest winning streak since January of last year. This coming on the back of a BOJ policy decision. As expected, the BOJ held rates. They flagged downside risks to inflation, did not push out the time frame when they can start normalizing and hiking rates again. Take a look at Sydney futures down as well as we're headed towards a federal election on Saturday. What's been interesting is that, of course, we have the backdrop of trade negotiations right now ongoing. Japan and the U.S. had their second round in Washington, D.C. What we'll be watching today from those negotiations, treasuries. Take a look at how futures are looking in the U.S. session, of course, early in the Asia morning hours, because now Finance Minister Kato here in Japan flagging that the U.S. Treasury holdings that Japan has are actually a card in ongoing trade negotiations. He did not say whether he will use that card. But remember, back in April, we had this jitter in the Treasury space because of China's holdings of Treasuries again. Well, we have seen Treasuries really slumping in the previous session, as well as we got U.S. manufacturing activity shrinking in April. Of course, the ongoing tariffs are in place, but at the same time, they didn't shrink as much as expected, Heidi, so there was a little bit of a sigh of relief. Take a look at U.S. futures now down 0.2% after 8 sessions of gains.
Shery, as you say, the tariff, the trade war thematic is really front and centre when it comes to this earnings season, particularly when it comes to the big tech names. And Apple shares was one prime example. Lower in late trading, reported worse than expected sales in China and warned that tariffs will increase costs by $900 million this quarter. Our senior tech editor, Nick Turner, joins us now. And so, this is sort of just putting the squeeze further in the Chinese market where, of course, Apple had already struggled with non-tariff related woes. They're also being squeezed when it comes to production.
Yes, I think that people were sort of bracing for maybe more bad news out of China, but it was a little worse than even what they had been estimating. So that's not a great sign. You take that together with the tariff situation, and there's just sort of this broader cloud tied to geopolitical tensions and the sense that the problems that Apple has currently, it hasn't made a lot of headway in fixing them, at least in this past quarter.
Some of those challenges have lied in artificial intelligence developments as well.
Yeah, that's an issue that came up during the conference call with Apple, and CEO Tim Cook, said the company is making headway on, for instance, improving its Shery voice assistant, but he didn't necessarily say anything that I think gave people the sense that Apple was catching up quickly on its rivals in AI. So that's still sort of a wait and see situation.
What is the biggest sort of issue now for Apple? Because we know that the local competition, the loss of market share in China was already in place before the Trump administration this time around. But are there ways that they can get around the cost issue when it comes to the China-centric production?
Well, certainly they're already moving the U.S.-bound iPhone production to India, and it did sound like there was some progress on that front. They're going to have most of those phones coming from India in 2026. And I think that Cook said that about half of them are already coming from India. So it's pretty amazing when you think of just how reliant Apple was on China a few years ago that they've even maybe gotten this far. But certainly the dream of the Trump administration of having U.S.-made iPhones is not something that they're close to. And even the India situation will take years really before, especially the most advanced iPhones can really be consistently, reliably coming out of India.
Bloomberg senior tech editor Nick Turner there, as we're also watching Amazon in after hours because the stock is now under pressure. The company gave a weaker than expected forecast for operating profit in the current quarter on tariff concerns. For more, let's bring in e-commerce reporter Spencer Soper. Spencer, I mean, it's a really challenging time, especially for these retailers, at a time when they really source much of their products from China. I mean, what were the highlights here? What could they say?
Yeah, they basically just said that their formula for success hasn't really changed, that they still want to offer people as many products as they can possibly find at the lowest prices possible, and that, you know, given their diverse supplier base, you know, they got more than 2 million merchants from all over the world that sell things on Amazon, that should still be a marketplace that stands out for deals, even if there is tariff pressure. So they're basically just trying to send the message that they're in as good a position or better position than many other places, you know, for the tariffs. But there's still just a huge amount of uncertainty around it. Their guide on their operating income was rather wide, which they attributed to the uncertainty. So, you know, the markets reacted to that.
Was there a bright spot when it comes to AWS?
Not particularly. I mean, AWS did well and generates most of their profit, but it had decelerated a bit, and so there were concerns around that. And I think what happened was earlier in the week, Microsoft reported, and its cloud computing revenue was quite strong and actually beat expectations. Amazon was the opposite of that, came in a little bit light, and so probably caused some concerns. So it had gotten a little bit of Amazon stock had gotten a bit of a bump based on Microsoft results, probably investors anticipating a similar beat from Amazon, but then when they didn't have the beat, they had to give that bump back.
And all of these businesses really tiptoeing around the White House and its policies, right? We had a report earlier that Amazon was looking perhaps at displaying the tariff impact on their costs to consumers. What do we know about this? And could this happen in the future, perhaps with even other companies?
Yeah, that looked like it was something around Amazon Haul, which is kind of Amazon's reaction to Temu and Shein, these kind of discount factory direct marketplaces. And Amazon's answer was like, look, this was never an approved plan and we were never planning to do it. But that is something that, you know, other companies are implementing. If they're a little less sensitive to the whims of the White House, they'll slap a tariff bill or even label it a Trump tariff bill on the, you know, so consumers know exactly why they're paying so much extra. But Amazon certainly backed down from that because it doesn't want to upset Trump.
Bloomberg Spencer Soper there with Amazon and how all of these trade woes are playing out for e-commerce. Well, President Trump says he will nominate National Security Adviser Waltz to be the next UN ambassador to the US ambassador, I should say, to the UN. Waltz has faced, of course, criticism after adding a journalist to a Signal group chat where US officials discussed sensitive attack plans. Let's bring Nick Wadhams, who leads our US national security coverage. And Nick, there's been ongoing calls for his resignation, for something to be done about Pete Hegseth as well. In fact, you know, all of the top leadership that was involved in this and potentially other Signal groups as well, right? But this is more of a job swap type situation or, a change in personnel.
It is, but it seems pretty clear this is a demotion. I mean, Mike Waltz is losing his constant access to the Oval Office. He had an office in the White House and the National Security Council building, and had traveled with and basically been in Donald Trump's constant presence for a long time and played a leading role in advising him on all sorts of issues. Now he's going to be moving to New York and essentially representing the Trump administration on foreign policy issues, but he will be very much in message delivery mode, so shaping that message more or less from the sidelines. So the administration is saying today this was not a step down. J.D. Vance went on Fox News earlier this evening and said he just thought that Mike Waltz was the right man for the job. But clearly what you're seeing is the president sideline a key aide after this big signal controversy.
A step down for him, but was it a step up for Marco Rubio?
Oh, certainly. I mean, this is a real consolidation of power for Marco Rubio. He becomes the first Secretary of State and National Security Advisor since Henry Kissinger in 1975. I mean, what you've seen is a really fascinating narrative for Rubio. This was Trump's main primary opponent in 2016. They traded barbs constantly, but he has figured out a way to sand down a lot of his opposition and a lot of his positions that are quite controversial with the sort of MAGA base on Iran and Russia, and really presented himself as much more of a purveyor of the president's policies and messages, and he's now just being given more and more responsibility.
You mentioned Iran, of course, at a time we're also watching negotiations with Ukraine and Russia and China as well, potentially. But when it comes to Iran, have these talks kind of stalled?
Well, a lot of conflicting signals out of the administration and Iran. We had surprisingly in the last week or two seen both sides say they had seen some positive steps. That was after Trump abandoned the first nuclear deal in 2018, and then you really saw no progress at all during the Biden administration. So a bit of a surprise there that the administration and Iran were essentially singing from the same songbook. However, they did hit a snag. We were supposed to see a fresh round of talks this weekend. Oman, which has facilitated the talks, is now saying those talks are going to have to be rescheduled for logistical reasons. The U.S. is saying, you know, we never agreed to those talks at that time. And then since then, you've seen this barrage of tweets from Pete Hegseth, the defense secretary, and also from President Trump, ratcheting up the pressure again on Iran. So trying to look for clarity there. I mean, they are still very far apart from a deal. It should be said they're nowhere near having a sort of text, a draft text that would be able to spell out a lot of the details and tackle some of the thorniest issues. So still a lot to learn about which direction those talks are headed in.
Bloomberg's Nick Wadhams there with us, the latest. And coming up on the Asia Trade, we'll be previewing Australia's election with the CEO of the country's biggest home builder, Metricon, assessing the market implications too with 10-cap, plus get the view on US-Japan trade negotiations with AmCham Japan. Much more ahead. This is Bloomberg. Australians head to the polls on Saturday to choose new members of Parliament and, of course, to determine who the next Prime Minister will be. Bloomberg's Paul Allen joins us now. And, Paul, you're at a polling booth in Sydney, which is open for early voting. It's interesting, isn't it, because the opposition didn't even come through with their costings until yesterday, but it seems like a lot of Aussies have already made up their minds.
Absolutely, they have. The latest data we have from the Australian Electoral Commission, now 4.8 million Australians have cast an early vote, and that's more than a quarter of eligible voters. So you're quite right, a lot of Australians have made up their minds. And when you combine that data with the polling data, it makes an upset quite hard to imagine. It looks like we are on track for some sort of Labor Party victory. So that would be Anthony Albanese's Labor government retaining power, either in majority, or the more likely outcome would perhaps be a minority government. Much harder path to power for the opposition Liberal National Coalition. They only hold 53 seats in the House of Representatives at the moment, 76 are needed for an absolute majority there. So the road's got a lot harder for opposition leader Peter Dutton. He's also also performing poorly compared to Anthony Albanese in the preferred Prime Minister stakes. And it was interesting to see how Peter Dutton has tacked during this campaign. Initially, he embraced a number of parties that would be familiar to a US audience. The Doge-inspired cuts to the civil service, a plan to end work from home for civil servants, and then came the April 2 tariffs, including a 10% tariff on Australia. The mood on President Trump soured quite dramatically. Peter Dutton quickly kicked those policies to the curb, and he's moved on to much safer political ground since.
Depending on the outcome, Paul, can we expect any major policy reform in the next 3 years in Australia?
Well, the short answer to that would be no, probably not. We have seen some interesting shifts in terms of policy. Peter Dutton, I mentioned, has now stopped talking about things like the cost of living in the past few days and started talking about traditional Indigenous greetings ahead of major public events, so-called welcome to country sorts of speeches. Now, this suggests two things. First off, it's moving towards a more politically instinctive ground, appealing to the base instincts of the Conservative base, but also a shift away from policy. Cost of living still does loom large as the number one issue here. Both leaders have seemed comfortable fighting on that. Housing as well, although it's yet to be seen if there's going to be any meaningful change on housing policy once this election is over on Saturday evening.
Bloomberg's Paul Allen there, and let's bring for more analysis when it comes to the property issue. Our next guest runs Australia's largest residential builder. With us now is Brad Duggan, who's the CEO at Metricon. Brad, really great to have you joining us, of course, a day before an election that has once again been characterised by the ongoing cost of living and housing affordability and availability crisis, right? I guess I'll start off by asking you, how do you characterise this crisis? Because as Paul just touched upon, it's very difficult for a government being in power for 3 terms to make some of these structural changes that look like they might be necessary to really fix the problem.
And I think the federal government also isn't in charge of a lot of the levers in relation to this crisis. A lot of those levers reside at the state government level, and really they're working hard to try and make an impact when, in actual fact, they need to reach into the states and make policy changes at that level.
Is that why you're calling for more of a sort of holistic or, the states as well as federal approach with a national summit that could potentially put through some of these more effective policy changes?
That's right. I think a national housing summit is necessary. A couple of years back, we did the same thing in relation to jobs and skills in the post-COVID era. And we really need to bring everybody together to get everybody in alignment because, I see the federal government working quite hard. There's a lot of announcements that have been made to try and make an impact in this housing crisis. But a lot of the changes reside in the state level, particularly around planning reform to try and get people to site faster. Now, I see many examples each day where we can build a home in 60 days, but it's been sitting in planning for sometimes up to 2.5 years. And we really need to get the state governments to fall into line. And my recommendation in that space is that the federal government needs to really look at penalising the states in terms of the funding that flows from the federal government to the state government so that they can really make some change. For example, if there's a pet infrastructure project that needs to be funded in a state government, this federal government should be using that as a lever to try and get the state to undertake significant planning reforms to get people to have confidence to build a new home.
The industry has also been really hampered by the labour shortage that we're seeing in Australia. And what do we need to do at this point to help with the workforce and just have the people out there to be able to build these homes?
Yeah, I think we have lost an opportunity in the last 3 years. There has been a bit of a downturn in activity levels across Australia, probably with the exception in Western Australia. And we really lost that opportunity over the last 3 years to build capacity in our workforce. I think there is this belief in Australia that's existed for a number of years, that the only way you can be successful is to have your children attend university and pursue something along those lines. And we really need some structural reform to encourage people back into trades. They are professions. They do have the ability to provide great family and outcomes and lifestyles. And it really needs to be a significant change. But unfortunately, that's going to be a long-term strategy. We need medium-term and short-term strategies. And I think some of that in the short term is looking at migration and moving some of those necessary trades into Australia to help us. Because undoubtedly, when the economic environment improves, when the interest rates further reduce, which we expect to occur in the next 9 months, there's going to be a need for significantly increased number of trades and labour to build our homes. The Property Council is forecasting that we're going to fall about 500,000 short on that National Housing Accord target of 1.2 million, and that is just going to exacerbate inflationary costs on homes if we don't find a solution to supply.
Brad,
you mentioned interest rates,
some of the more
so
favourable
how
tax settings.
Good.
I've actually got multiple ones I requested.
Right. I'll take it next. I think Heidi was asking about the tax settings, but I also wanted to know about the mortgage environment.
Yeah, if we talk about tax settings first, I think what customers need is certainty, and I think that's the one thing our governments need to provide is a certain stable environments. And we hear a lot of rhetoric at the moment in the press, and also from the potential returning Labor government in relation to capital gains tax, in relation to taxing of superannuation balances, and all that leads to a real negative impact on confidence within the community. There is a lot of work being done by the federal government to provide social and affordable housing, and it really is an important part of the housing crisis. But really, to get large numbers of homes, we need people in Australia. We need private enterprise. We need investors to put funding into Australia to build those homes. And creating an uncertain tax environment is not helpful in relation to achieving that goal. Shery, in relation to your question about mortgages, we saw an interest rate cut earlier this year, and it really did not have any impact on confidence amongst consumers. And I think that's really because the cost of living crisis and customers' pressure on their home budgets. The 25 basis point cut that occurred earlier this year didn't have any impact. I think we're going to need at least another 3 decreases, and some positive sentiment from our Reserve Bank. I think there's a really hawkish and negative sentiment that comes out of the Reserve Bank that really isn't inspiring to the Australian consumer. We need both those things to happen before we start to see the demand that's out there in the market converted into confidence and action.
Brad, really great to have you with us. Brad Duggan, who's the CEO at Metricon. More ahead on the Asia trade. This is Bloomberg.
Take a look at how Treasury futures are looking in the Asia session. Of course, we had seen significant pressure overnight as well, with that manufacturing activity report shrinking in April with President Trump's tariffs. Now we have commentary coming from Japan's Finance Minister Katsunobu Kato saying that the card exists that U.S. Treasury holdings could be used for trade negotiations, but whether or not Japan goes ahead and uses that card is a different decision. Remember, there was a lot of skepticism about U.S. assets, especially around China, also potentially offloading some of those treasuries as we continue with these trade tensions around the world. Japan and China are the largest foreign holders, so even a hint of really politicization could unsettle the markets. We had yields under pressure in JGBs, the Japanese yen also under pressure already after the BOJ held rates steady. This also as the BOJ flagged downside risks to the inflation outlook, pushing out perhaps the time frame of achieving the price target. Governor Ueda really speaking to those uncertainties because of the tariff war. This is Bloomberg. Breaking news out of Japan, we are getting the jobless rate coming in at 2.5% for the month of March, slightly higher than the previous month and above economists' expectations. But we are getting the job to applicant ratio showing that 126 jobs are now offered for every 100 applicants. It was at 124 just the previous month and is slightly coming in above expectations. Of course, overall, it's a very structurally tight labor market here in Japan, and that has led to more wage hikes, also inflation. So we continue to see that cycle, Haidi, despite the fact that the BOJ had to hold rates in the previous decision just yesterday because of the uncertainty over tariffs.
It's uncertainty that's sort of being grappled with by central banks and by governments, right? Particularly those that are headed for elections this year. We've spoken about Australia. Singaporeans also head to the polls this Saturday. The country's holding the general election amid a global trade war that's causing a more volatile and challenging environment for small and open economies. Bloomberg's April Hong is standing by in Singapore. And so we see, really government stability has been the name of the game for Singapore, but it's difficult for such an externally vulnerable middle country in this sort of environment.
Yeah, absolutely. So it's this uncertainty that is kind of drawing the need for political stability. But the stakes, don't get mistaken, in this election are very, very high, perhaps even higher than the 2020 general election. The Prime Minister has already called the Trump 10% tariffs not actions one does to a friend. And we know how a trade shock could implicate the global economy, and those ripple effects could turn into these massive waves for Singapore. So the ruling party that has not lost a single election in more than 60 years is seeking a powerful win in order to steer the country amid these uncertainties. Have a listen.
Singapore's Lawrence Wong faces his first electoral test since taking over as Prime Minister, and is seeking a strong mandate to govern at a time of major shifts in the global trading order, a system that Singapore's trade-reliant economy has long benefited from. The country will have to navigate Trump's tariffs and balance relations with China, its largest trading partner. For voters, bread and butter issues remain top of mind. Singaporeans face elevated prices from food to housing, though inflation has eased and authorities have rolled out a slew of measures to help people cope. Questions linger on the extent in which the ruling party can ride the momentum from handouts and subsidies into the election, or whether different generations of Singaporeans have different priorities. The ruling People's Action Party lost more seats to the opposition in the 2020 election and saw a drop in its vote share. Amid a political transition, a number of ministers have recently announced their retirement. And the PAP is fielding its largest number of new candidates in recent years. Singapore's external challenges come at a sensitive time as its leaders hand over the reins to the next generation.
Just to paint a picture of the external challenges, many of Singapore's key trading partners face levies much higher than 10%. So this could deplete shipments. And this is a country whose trade volumes are 3 times its GDP. Market volatility could mean a drag on investments in this financial hub. Households potentially dialing back on spending. Bloomberg Economics expects growth of about 1% this year. This is a sharp slowdown potentially from the roughly 4% a year ago. And the government is not ruling out a recession.
April, a few doubt that the ruling party will come out on top, but what are we watching for in the margin of victory?
Yeah, Shery, the ruling People's Action Party has won 13 general elections. So that's more than 60 years of unbroken rule. And the Prime Minister has said that he expects a tough contest this time around because the opposition is better organized. But there's a theory out there that in times of crisis, voters seek stability. This is something that has served Singapore well in the past. But as we've seen in recent elections around the world, voters delivering blows to incumbents. So this theory really going to be put to the test. What we're watching for is the vote share as well as the number of seats, that the ruling People's Action Party doesn't lose more seats to the opposition.
Bloomberg's Avril Hong there joining us from Singapore. We're also watching politics in South Korea. That crisis deepening in the country after Finance Minister Choi Sang-mok resigned hours before he was due to become the nation's stand-in leader. Bloomberg Seoul Bureau editor Danny Thomas joins us now with the latest, really becoming sort of a revolving door of stand-in leaders at a time when Korea faces some crucial challenges, even with these trade negotiations ongoing with Washington.
Yeah, absolutely. Yesterday's news flow has been pretty unprecedented in even by Korean standards. We had the Supreme Court rule, quite surprisingly, against the frontrunner in the presidential election. That in itself was a surprise. And then close to midnight, the acting president who was to be take on the finance minister who was going to be taking over as the acting president, he resigned. Because the current acting president and prime minister is joining the presidential race. So it's been a complete, utter chaotic day of political crisis. And what's not clear on both ends of the spectrum is who will replace if Lee Jae-min is to back out of the race and the ruling PPP is itself in a kind of a disarray. So it's really brings out some of the worst scenarios possible in South Korean politics in quite a number of decades.
And Danny, we've spoken about the enormous amount of uncertainty both domestically and internationally. What are we looking ahead to next in terms of, what the outlook is and how the political environment might see a little bit more stability soon?
Yeah, so I think everybody is now focused on when the Supreme Court, or actually the High Court, will now decide the fate of the opposition leader who was the frontrunner, who was seen as the next president. If the timing of that comes before the June 3 election, then I guess, there's still a chance that the opposition party may have to find a new candidate, and that throws everything into completely chaos. But if the decision comes after June 3, we're still entering into uncharted territory, because if the decision comes and it goes against the president, if he becomes the president, then the question is, does he enjoy the immunity that ordinary president would have enjoyed? And then it brings back to the whole question of whether this president needs to move or not. So we are really looking into pretty chaotic scenes from now on.
Well, there's further confusion as well, right? Because the Supreme Court also found the presidential frontrunner with some of these legal complications as well.
Yeah. Yeah, so I think that is, I think more than what the resignation of finance minister, I think the bigger question mark is whether the presidential frontrunner was going to be having further setback. If the High Court ruling comes before the June 3rd election, I think that is going to be a big concern for the markets, because a lot of people were kind of going into the election with the assumption that Lee Jae-min, who is a clear frontrunner, would take over as next president. But if that is not happening, and if the Democratic Party doesn't have a clear number 2 to replace him, I mean, you're really looking in a pretty bad crisis scenario in South Korea.
Bloomberg Seoul Bureau editor Danny Thomas there. Going from a political crisis to a fertility crisis in South Korea, we continue to see, of course, the country's birth rate at one of the lowest levels around the world. It's showing a little bit of a sign of improving. The birth rate did rise for the first time in almost a decade. I spoke with the mayor of the city of Seongnam, Sang-jin, about some of his plans to boost fertility and what more still needs to be done.
Seongnam City has this new program helping young people meet each other. Tell us a little bit about how this matchmaking project came to be.
우리가 도시 차원에서
At the city level, we believe it's essential to act. Many young men and women in Korea don't see marriage as urgent or necessary. Nearly 50% think it's optional. That's why improving perceptions about marriage and creating a positive environment for young people to meet, love, and build families is a responsibility we older generations and local governments must take on. Currently, the government has countless scattered policies to fight against low birth rates, and people don't even know what those policies are. The Presidential Committee on Aging Society and Population Policy is a special advisory committee. But how many times do they meet? Not even once a year. It's symbolic, not functional. Unless the president actively leads it, it won't make a difference. These committees have accomplished almost nothing. It's just for show. That's my cold, honest assessment.
이렇게 저는 냉정한 평가를 합니다.
Seongnam Mayor Sang-jin, you can catch the full interview on Wall Street Week coming up Friday at 6 p.m. New York time. We have more ahead. This is Bloomberg. We're getting the latest lines from the chief trade negotiator of Japan, Akazawa, now coming out saying that they had talks with their U.S. counterparts for 130 minutes. This is the second round of negotiations for those tariffs coming from the Trump administration. They're saying that they were able to have deep discussions on the tariffs. Remember, they're 25% on steel and aluminum, 10% across the board. Also, some eased tariffs on cars as well. Akazawa saying that they strongly urged again to exempt Japan from those tariffs. Of course, Haidi, the 10% across the board could actually go up to 24% after the 90-day pause.
Well, of course, all of this confounding a lot of countries at the moment when it comes to dealing with the tariff war and the trade war with the US. And here in Australia, we've got Australia's headed to the polls, voting in that national election on Saturday that's been dominated by cost of living concerns, but it hasn't escaped either the shadow of the Trump trade war. The Conservative opposition leader, Peter Dutton, began the campaign with a pretty healthy poll lead. But as Paul Allen reports, surveys now suggest Labor's Anthony Albanese could become the country's first Prime Minister in more than 20 years to win back-to-back elections.
Saturday is election day in Australia, and already more than 3 million of the country's 18 million voters have cast an early ballot. For those still undecided, this election's boiling down to one key issue.
Is anyone feeling that you're better off today than you were 3 years ago?
Cost of living and runaway real estate prices are top of the domestic agenda. It's a battleground where both opposition leader Peter Dutton and Prime Minister Anthony Albanese seem comfortable. Trade and foreign policy, though, have left both leaders squirming after President Trump imposed a shock 10% blanket tariff on all Australian imports. Dutton initially copied some Trump policies, including spending cuts styled on Elon Musk's so-called Department of Government Efficiency and ending work from home for civil servants. He's since dumped those ideas and has been distancing himself from the US president.
We trust the United States, and I don't know the president. I've not met him. The Prime Minister obviously has been able to.
So you're not willing to say you trust Donald Trump?
I don't know Donald Trump is my point.
On the same debate stage, Albanese also swiftly moved on from the issue of trust in Trump.
I have no reason not to. I've had a couple of discussions with him.
Do you trust China's president, Xi Jinping?
I have no reason not to either. China's our major trading partner. 1 in 4 Australian jobs depends upon trade. It is in Australia's national interest to have a good economic relationship with China.
Australia has already made a $500 million down payment to the United States under the AUKUS Defence Pact, which will see Australia receive nuclear submarines. Neither major party wants to risk sinking that deal by alienating President Trump, nor risk creating a fresh round of trade tension with China by getting too close to him. Unlike the price of eggs, those issues are too fragile to be on the ballot this Saturday. Paul Allen, Bloomberg, Sydney.
Priyanka Samaras is a Director of Strategy and Analytics at political consultancy firm RedBridge. It's great to have you with us. So how would you characterise the way that these campaigns have been run?
Yeah, I would say that the Labor Party has successfully turned this election a referendum on the opposition leader, Peter Dutton. At the beginning of the campaign, as that previous segment touched on, the coalition was clearly leading the polls. They are really struggling to actually do that, obviously, now, and they look like they're being defeated tomorrow night. So I think the Labor camp has actually run a much better campaign.
It's interesting, particularly when you take a look at the pre-polling data, right? Particularly as, certainly from the opposition, we only had their costings yesterday, from the government on Monday. Do you think that the major political parties certainly are playing this wrong when it comes to how many Australians have obviously already made up their minds?
That's right. They're still approaching this in a very traditional way. They run the campaign over a 4-week period when in reality they probably should be out there in the market 6 months out trying to sell their message, particularly when it comes to young Australians who are going to determine this result now in a very profound way. 42% of those Australians that are enrolled to vote are millennial and Gen Z, and that's a particular problem for the coalition, who only gets around a quarter of that vote.
This is a demographic shift that we've seen for this first election, right? This is the first time that we've seen that shift happening. What issues then become more paramount? Obviously, there's more sort of socially progressive issues, you would imagine, but also the cost of living and the affordability when it comes to property is really hitting hard younger people versus, perhaps the older generation that have had a chance to make investments.
Yeah, the young Australians now are coming to the realisation they're going to live a quality of life that is lower than their parents, and that's driving a lot of the political sentiment. And it's these young Australians, for example, who are going to potentially elect up to 14 to 15 independents at this election. And it's also these young Australians who are basically providing the fuel to the fire for at least up to 30 seats that are going to be in contest that doesn't involve a major party.
So when it comes to really the feeling of Australians for these two major candidates, where are we at on their views about Albanese? Because when we started watching this campaign unfold, we thought that the opposition leader Dutton had the lead.
Yeah, look, it's basically now a choice between the least worst option. So in a lot of our surveys, most Australians will define Albanese as weak, but they will define Dutton as arrogant. And in that contest, you would go for the less of the two evils, and that's what's going on. But it's also, as I touched on before, driving that large non-major party vote as well. We expect close to 6 million Australians to vote for something other than the two major parties in Australia.
Are policy issues like health, for example, which Prime Minister Albanese has focused on, making any difference?
Yeah, absolutely. The health policies which the Labor government has focused on has resonated with young women in particular. We've had in this country a very significant rising problem with regards to voters in the outer suburbs and regions of the country accessing quality healthcare. And obviously this is the focus for the Labor camp, and it's one way they were able to intertwine health with the cost of living concerns of voters.
When it comes to trade negotiations at this point, given, of course, a lack of clear leadership ahead of the elections, what are your expectations of what the next leader needs to do?
Well, if we're going to talk about trade and tariffs, the one driver of this result, I think, tomorrow night will be Trump. One in 5 millennial and Gen Z voters have shifted their vote over the last 4 or 5 weeks. And the number one issue, according to our surveys, is the Trump factor. And unfortunately for Peter Dutton, his perceived closeness to the Trump administration has not done him any favours.
What do you perceive as being the influence of the Teals this time around? Because obviously last time they were sort of untried, untested, but also there was a great deal of optimism, right, in terms of being able to restore that balance. Has that happened, and how do you think that will play out for, you know, some of these potential kingmaker candidates like Allegra?
Yeah, absolutely. There's still a significant hunger out there in the Australian electorate for independents. We expect most of these independents to be re-elected, and we also expect new ones to be elected. So they are contesting a number of other additional seats across the country, and I would not rule out them winning additional seats as well.
What's your call for this result?
Labor to win between 72 and 78 seats. The magic number is 76, but that's what I think is going to happen tomorrow night.
So getting over the line with a majority.
That's right, majority and possibly minority.
Okay, really great to have you with us. Samaras is the Director of Strategy and Analytics at RedBridge. More ahead on the Asia Trade. This is Bloomberg.
We continue to hear from Japan's chief trade negotiator Yosei Akazawa saying that FX and national security were not raised as topics in the second round of negotiations on tariffs with the United States. That Akazawa doesn't think that FX and national security are related to tariffs. Of course, one stance that Japan and other countries have held firm to, the fact that economic and trade issues are separate from currency issues. Akazawa also saying that they did not discuss China specifically in this bilateral meeting with the United States. There was a lot of concern that we might see Washington applying pressure to partners to sideline China. Akazawa also saying that they will keep watching the U.S.-China developments very closely, that the U.S. and China are both key trading partners for Japan. Of course, the biggest exporting destination for Japan is the U.S., overtaking China back in 2023. But still, both of these two countries, huge trading partners for the Japanese economy. Haidi.
And of course, Shery, so much of this trade uncertainty has been weighing across the commodities complex as well, right? Take a look at oil, just seeing that renewed slide now before the OPEC Plus meeting that could see an agreed upon supply hike. So really coming into the end of what has been another volatile week there, traders weighing that potential supply increase from OPEC Plus and of course the ongoing trade war risks to demand. The fresh threat of US sanctions against Iranian flows as well is also at play there. We also saw a report of another bumper increase, could be increased from OPEC Plus. Watching gold as well, we've seen gold just pretty muted in trading price action at the moment, but falling to a 2-week low now. These signs of potential trade talk progress between the US and other nations, including, of course, here in Asia, but also critically with the EU as well. And that sort of sapped some of the demand for haven assets, including gold. Also watching some of the sort of growth-sensitive commodities and metals like iron ore at the moment. We're seeing pretty flat trading when it comes to the Singapore pricing, but we've seen this slow loss of altitude for iron ore right over the recent months, and the outlook is really to look at further declines as we see steel production cuts expected out of China.
Right. The market opens in Japan, South Korea, and Australia are next. This is Bloomberg. This is the Asia Trade. We're down to Asia's major market opens after big earnings results from the likes of Apple, Amazon, really showing the impact of those tariffs coming from the Trump administration. And Heidi, we'll be watching treasuries because Japan's finance minister is now talking about those holdings as being on the table for trade negotiations.
Truly extraordinary, and we will see that market impact, right? Particularly as we've all been wondering whether China is going to be playing that card in negotiations. But sort of Japan's come out and talked about that as a strategy first. But Shery, of course, also political uncertainties are abound when it comes to these twin elections this weekend here in Australia and also in Singapore.
Yeah, we'll be watching that as we head towards the vote on the weekend. Take a look at how Japan is coming online as we are coming off that Bank of Japan policy decision, holding the rate steady as expected, but flagging those downside risks to inflation. You can see the Nikkei now gaining ground for a 7th consecutive session. This is the longest winning streak since January of last year. We had seen the downside pressure on the Japanese yen, also on JGB yields after Governor Ueda spoke about the uncertainties around tariffs. We're hearing from the chief trade negotiator as well that he's talked with his U.S. counterparts, and the currency and national security were not raised as topics. They did not discuss China specifically either, but of course we'll be watching what Japan does with those U.S. Treasury holdings. There could be more skepticism about U.S. assets going forward. This was a big concern last month. Take a look at how South Korea is opening at the moment because it's coming back from holidays, and of course they are facing another political crisis. The finance minister just resigning just hours before he had to become the standing leader. Of course, we are headed towards that presidential election. Take a look at the Kospi coming online down 0.1%. We also had April consumer prices rising a bit more than expected year on year, 2.1% growth. South Korea really facing the pressure on their economy, on ongoing political crisis, the tariff, the trade negotiations as well. Authorities coming out saying that they will try to minimize the negative political impact on the markets. They will continue to monitor the financial markets 24 hours, Haidi, as we continue also to see South Korean trade negotiators try to achieve some sort of agreement with Washington.
Take a look, Shery, as we head into, of course, the weekend election here in Australia and how markets and the currency, as well as Aussie bonds, are trading at the moment. We're seeing a little bit of sideways trading when it comes to the ASX. Of course, is coming off a few sessions of pretty strong gains here. So we are seeing perhaps a bit of lack of confidence as we go into that vote. We will be expecting sort of the contours of a result, usually by Saturday evening after polls close here in Australia. But at the moment, we're still seeing a fairly comfortable lead in the polls from Prime Minister Anthony Albanese and his Labor government as we head into that key vote. Of course, we've been talking about an enormous number of pre-voting that's already taken place this year compared to previous years. Taking a look at the Aussie dollar at 63.85 at the moment, some of the calm that's been restored to FX markets as a result of sort of no new real negative news flow when it comes to trade has been benefiting the Aussie there. And we're also watching the story when it comes to oil, though, still looking pretty risk off, given that we are expecting potentially more supply from OPEC Plus to be agreed upon. Let's bring our next guest, who says these markets have become too complacent, that there's not enough cushion for possible downside. With us now is Junbei Liu, lead portfolio manager at TenCap. Junbei, always great to have you with us. And this has been a question that sort of has been front and centre for me, watching the relative calm that's been restored, right? Do you think that there is a little bit too much complacency happening at the moment, given that the sort of modus operandi of policy making and news flow can be so volatile with this US administration?
Look, absolutely. I think, the market has done incredibly well. Looking back at home here in Australia, the ASX is up in the double digit just in the last few weeks. I think there is a level of complacency. And then, of course, we are optimistic for a trade deal. But I think market is sort of not really thinking about what it might look like. And what if it takes longer to come through? We already see in the US market some of the companies that come through with cautious guidance. Some have pulled the guidance. Some of the share price even though the share price hasn't reacted significantly negative to the downside, but we do think there is investors do need to be a little bit more cautious, just given we have no idea what does it look like and when it takes. And, the longer it takes, the more downside there is to the economic reality there in the US and potentially for the global growth as well.
Junbei, how are you positioning then at the moment to kind of account for still potentially having to pull levers to get some protection if things go south again?
Yeah, absolutely. So look, our portfolio is pretty agile. So, we do long short, and we do believe this is a market where you need to become a little bit active. 3 weeks ago, we thought market was oversold. We bought into a lot of those structural growers where earning doesn't get impacted and became a whole lot cheaper. And now some of them have done really well, and particularly some of the US facing consumer stocks has done really well. So, this is the time perhaps should take some off the table, just to wait to see what else to come. I think, this market is incredibly important to, to stay agile and then watch for the opportunities when they do rise. But when they do rise, you've got to make sure you do have the flexibility to take on those opportunities.
Yeah, let's talk a little bit about the flexibility. Are you playing any of the domestic political news that we have now? Elections in Australia, Singapore, political crisis in South Korea?
Look, I think, but talking about Australia back at home, to be quite frank, the policy difference is very minimal. And then obviously the market is now believing the Labour Party will be in power for longer. In general, the historical track record has been ALP does have more, it is more stimulatory towards the households, towards the small businesses. So potentially there's a bit more positivity towards those sectors. However, the policy difference right now, it's just too little. We're not really seeing too much significant differences. But what's interesting though, we are seeing consumer and corporate slowing down into election, like every other economy. Just there's a level of caution. So we do think that the quicker we can get out of the way, the better. We just need some stability and firm outlook.
Are you seeing any big narratives around the earnings season? I mean, because when you're talking about that caution, we continue to see it from the rhetoric coming from big tech in the U.S. as well, given the uncertainty over tariffs.
Absolutely. I think so far we're already seeing consumer-facing companies having downgrades and pull guidance. The tech companies have yet to really give any firm outlook. They have reported good numbers, the tech company, but their outlook is still a little bit vague. My view is that if you look at how tech earning trades in the previous cycles, they do track GDP growth in the US. So we got to be cautious for that sector as well, because if the consumer slows down, corporate spending slows down, their earning will slow down, and their share price have come back quite quickly, and then their expectations perhaps is a lot higher than some of the other more cyclical sectors where people already downgraded some of those earnings. So we're cautious across essentially the US exposed businesses, just because we have no certainty what might take place and how long it might take to get there.
Jinbei, do you like much when it comes to China and Hong Kong at the moment?
Yeah, we do. I think the valuation the story is still there, and also, to be quite frank, I think the positivity within China itself is actually, it's doing quite well. Yes, tariff, of course, it's going to be the uncertain outlook, but the government has made it very clear they are going to, throw money at it and going to continue to stimulate to get it past, what the tariff might look like, and it does look like this negotiation might take longer. But our view is that China domestic economy is doing well. Hong Kong is doing, as a consequence, is doing better, and particularly coming off a lot of very, very low base relative to equities like the U.S. equity market.
As the trade negotiations continue, we're hearing from Japan that perhaps their U.S. Treasury holdings might be on the table, not necessarily that they'll use that as a negotiating tool, but just this trend where we continue to see skepticism over U.S. assets. Do you expect that to continue, and what could be the implications for the U.S. bond markets and just the dollar?
Yeah, look, to be honest, I think we will have skepticism just as we go through this trade negotiation. But I'm yet to call that's the end of the U.S. exceptionalism or, the safe haven status of the U.S. bond and the like, and U.S. dollar and the like. I think it's, it's too early to call for end of those big, big thematic for decades. I think right now it's just a bit of uncertainty. Once we get past it, U.S. dollar is still one of the most, US dollar, US Treasury is one of the most and biggest asset class in the world. It's it's just very difficult to replace those and their status despite short-term volatility. And we know the short-term volatility has been created by the trade uncertainty and by the the volatility in the equity market as well because of the risk parity trade. But I do think that once we get past that period, we still do think there will be a trade deal, but it just might be a little bit different from what everyone thought to start with. And then, once we have that certainty, we can move forward. And then I do think that US will return to its previous status as the key core safe haven asset.
Junbei Liu, always good to talk to you, lead portfolio manager at TenCap. And we're watching those Apple suppliers in the Asia session. Of course, we got their earnings report, and they reported worse than expected sales in a very important growth market, China. They also warned that tariffs could be increasing costs this quarter, and we're talking about the likes of $900 million estimated by Apple in cost increases because of these Trump tariffs in the third quarter. And we know also that, of course, Apple has been struggling with artificial intelligence development. Their iPhones, the latest ones, haven't necessarily been that different from past models. You can see right now when it comes to those Apple suppliers, a little bit of a mixed picture. Of course, we have a lot of other news, Heidi, to contend with today.
It is certainly a lot for investors to contend with. That also means we have a lot to get through when it comes to the Asia trade. It is the final day of campaigning for Australia's politicians headed into this election. Polls are suggesting a comfortable lead when it comes to Prime Minister Anthony Albanese, but that risk of a minority government is still there. We'll take a look at the big issues and the potential implications next. This is Bloomberg. Australians head to the polls on Saturday to choose a new government and to determine who will be the next Prime Minister. Singaporeans are also voting at the same time. The Trump trade war looming large over both open economies. Bloomberg's Paul Allen is in Sydney and April Hong joins us now from Singapore. And Paul, as we head into this vote, you're at a polling booth in Sydney. It's open for early voting. And there's been a lot of enthusiasm because it feels like a lot of Australians have already made up their minds.
Yeah, absolutely they have. And even this morning we've had just a steady stream of people trickling into this voting booth in downtown Sydney. And that's been the case for the past 10 days or so. 4.8 million eligible voters have now cast their vote ahead of Saturday's official poll. So that's more than a quarter of the voting population here in Australia. So a lot of voters already made up their minds. And when you combine that with some of the polling data we've seen, it really does suggest that we are going to see a return of the Albanese Labor government, either a majority or perhaps more likely a minority government with support from some of those minor parties. And it's just the path to victory for Peter Dutton's Conservative coalition is that much harder. They're currently sitting on 53 seats. 76 is needed for a majority in the House of Representatives. So they're going to have to win back everything they lost in 2022 and more besides to win government. So the path to power for Peter Dutton looking a lot harder. Looks like Anthony Albanese almost certainly to become the first Prime Minister in Australia to be re-elected in quite a number of years.
Paul, depending on the outcome of the elections, can we expect any major policy reforms in the next 3 years in Australia?
Yeah, the watchword of this election really seems to have been policy timidity. The main issue has been cost of living. Both major parties have put forward plans to deal with that, various types of tax relief. The housing issue always looms large in Australia. Both major parties have put forward competing visions on that as well. But even those housing reforms do seem somewhat timid. You would have to ask some questions about whether or not they're actually going to be fulfilled after the election as well. because the last big housing reform package that was taken to Australians in 2019 was the removal of controversial tax breaks like negative gearing. The Labor leader Bill Shorten went on to lose that election quite heavily, and Scott Morrison won in a surprise upset win. So policy courage around housing tends not to be rewarded in Australia. So really we've seen some small targets here, and as you heard from Junbei earlier, there is a sense that people just want to see policy safety. In an era of exogenous shocks like we've had from President Trump's trade war, that really does tend to favour incumbents, and that's reflected in the early voting as well. A lot of Australians just seem to want to get this election out of the way.
Bloomberg's Paul Allen there. As we also turn to Singapore in April, I mean, Singapore is holding a general election amid this global trade war that's causing a more volatile and challenging environment. What's at stake here, especially for the ruling party?
Absolutely, Shery. A volatile environment, as you say. So the stakes for the ruling party are incredibly high, perhaps even higher than the last general election in 2020. The Prime Minister already not mincing his words, slamming Trump's 10% tariffs as not actions one does to a friend. And the trade shock that we're seeing potentially having ripple effects on the global economy, that could affect Singapore, hit it hard. The ruling party in this environment is seeking a strong mandate to steer the country through these uncertainties. Have a listen.
Singapore's Lawrence Wong faces his first electoral test since taking over as Prime Minister and is seeking a strong mandate to govern at a time of major shifts in the global trading order, a system that Singapore's trade-reliant economy has long benefited from. The country will have to navigate Trump's tariffs and balance relations with China, its largest trading partner. For voters, bread and butter issues remain top of mind. Singaporeans face elevated prices from food to housing, though inflation has eased and authorities have rolled out a slew of measures to help people cope. Questions linger on the extent in which the ruling party can ride the momentum from handouts and subsidies into the election, or whether different generations of Singaporeans have different priorities. The ruling People's Action Party lost more seats to the opposition in the 2020 election and saw a drop in its vote share. Amid a political transition, a number of ministers have recently announced their retirement. And the PAP is fielding its largest number of new candidates in recent years. Singapore's external challenges come at a sensitive time as its leaders hand over the reins to the next generation.
And just to give you a sense of these external challenges, many of Singapore's key trading partners face high levies, even higher than the 10% that could be imposed on Singapore currently. And amid this environment, note that for Singapore, the trading volumes are 3 times its GDP, so incredibly significant here. And of course, we also know how the government here has not ruled out a recession, so a lot at stake at this point.
Of course, when it comes to Singapore, there are a few that doubt that the ruling party will come out on top, but margins have been deteriorating in the last few years. So what are we watching for this time?
Yeah, so for the ruling party, this is a party that's won 13 general elections, meaning they've got a string of unbroken rule for more than 60 years. And the Prime Minister has noted that he expects a tough contest this time around because the opposition is better organized. There is a theory out there that in times of crisis, voters seek stability. This is something that has served the ruling party well in the past. But as we've seen in elections the world over recently, that voters have delivered blows to the incumbent. So this is a theory that will likely be put to the test. Amid all this, we're going to be watching the vote share as well as the number of seats, that the ruling party doesn't lose more seats to the opposition, Haidi.
Bloomberg's April Hong there in Singapore, and as we mentioned, top of mind is a trade war when it comes to all these elections that are taking place this year. But we are now hearing from Beijing, China saying that it's conducting an assessment when it comes to US trade talks. It's currently evaluating possible US trade talks through a statement that it's just released on US-China trade negotiations. Beijing, though, urging the US to correct mistakes when it comes to tariffs, and that the US should show sincerity if it wants potential trade talks. And we saw actually just in the previous day that China, through the state media CCTV, confirming that the US has reached out to China to initiate these tariff talks through various channels in terms of these massive tariffs that have been imposed on China, of course. And that was the first even acknowledgement of that happening from the Chinese side, despite various acknowledgements and the narrative that we've heard from President Trump and Treasury Secretary Scott Bessent there as well. At the moment, we're hearing China currently evaluating the possibility of trade talks with the US. This is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
Finding some sense in these crazy markets.
I hope they turn around, though. You know, because my 401k, I'm looking at my 401, my retirement, and I'm thinking, God, how many more decades do I have to work?
Your retirement account. I cannot say that enough. Set it and forget it.
You need to find a new target date.
I need to find maybe a new future. I'll be standing next to Paul Sweeney as a greeter at Walmart, you know, in our 70s.
Don't miss Open Interest live weekdays.
It's this ongoing challenge of what do they charge that's right for their business model. 90% of what they're going to make in life is coming from the road, so it's their financial business. But where do they find that line where it's accessible, the fan feels connected to them, they don't feel like they're overgouging, and it's slowly moving up over time, and that creates a lot of the social news and tension that exists in that what is the right price that you can deliver supply demand and keep fans happy.
Right. And you guys end up sort of having to bear the brunt of it, even though, as you like to remind people, you don't actually set the pricing. And but when I say you guys, I mean Ticketmaster.
Our job is ultimately to put that show on, figure out how to sell and fill every seat, and yes, probably take the punch in the head when someone's mad about the price. Or, you know, we kind of live in this rinse and repeat every, 10 times a year, let's call it, just to reset the game here. 95% of shows don't sell out. You don't hear about those. Those are priced under $100. Everyone is happy they got a ticket. There's no drama. Unfortunately, those 10 times a year, when you have 10 million people trying to buy 1 million Oasis tickets, there's no nice way to tell 9 million passionate fans, sorry, the store is closed.
We continue to see the latest trade headlines around Japan as well. The foreign ministry now speaking in Washington, saying that they will continue to call for all tariff exemptions. Of course, those second round of negotiations with U.S. have just happened. The official saying that they will try to get an agreement as soon as possible, and that the leaders of both countries will be expected to announce a final deal. Let's bring in Bloomberg senior editor Brian Fowler. Brian, because we also had comments from Yosei Akazawa, the chief trade negotiator, about where this could be headed. What caught the attention of investors, at least today, has been the whole thing about Japan holding U.S. treasuries, that was on the table, not necessarily that they were going to use it.
Yeah, so, I mean, these are two separate stories. So we had a bank of headlines from Akazawa, who finished more than 2 hours of discussions with his counterparts in Washington. And I think the takeaway from what he said was, it was vaguely optimistic. He said he thinks the talks are going to gain momentum in the middle of this month, which sounds like they agreed to continue to work toward an agreement. He also said, though, that a lot still remains very vague, needs to be made more concrete. Ahead of the talks, we thought Japan might talk about relaxing some of the procedures for importing cars, which would help the U.S., or buying more U.S. corn or soybeans. And we didn't get anything like that from Akazawa. So it seems like there's a lot that's very vague. Now, shifting to the Treasury's story, Finance Minister Kato, in a TV appearance this morning, said that it was a card that could be played But whether to use that card is another issue. Very hard to know how serious he was about possibly using treasuries in the negotiations, but just saying it is kind of puts the fear into the U.S. because Japan holds more than $1 trillion of treasuries. It's the biggest holder. Back in 1997, Prime Minister Hashimoto threatened to use selling treasuries in his talks with the U.S., and it caused a lot of panic in the market. So there's historical context for this that could make it a very serious issue.
But right now, the feeling is that, as you continue to say, nothing specific has come out, right? And yet they're saying they want to get to a final deal as soon as possible and that the leaders will announce it. What indication does that give us of the time frame here?
Yeah, so I think one of the questions is, what does it mean exactly when they talk about a deal or an agreement? Because I think to actually get a very specific agreement that's wide-ranging on trade is going to take a lot longer than the next month or 2 months or 3 months. So I'm guessing that what they're really talking about is some sort of face-saving agreement where Trump can say, okay, look, I got Japan to come around, and Japan can say, yeah, we're going to keep talking. But maybe really it's all about just agreeing to keep talking about something for the future.
Agreeing to keep talking. Brian Fowler, Bloomberg senior editor here, watching the Japan trade negotiations, as we're also watching, of course, what's happening between China and the U.S. Take a look at the offshore yuan. The Chinese market's on holiday, but Beijing now saying that they're currently evaluating possible U.S. trade talks. This is Bloomberg. Take a look at how futures are trading at the moment. We had seen Wall Street gaining for the 8th consecutive session. Right now, we're extending those gains early in the Asia session. Eurostock futures also trending to the upside. We had some hints coming from China that they may be open to negotiations. China saying that they're currently evaluating possible U.S. trade talks. They're saying that the U.S. should show sincerity if they actually want these negotiations, urging Washington to correct mistakes on these tariffs. They're conducting an assessment on these U.S. talks. Of course, we had been reporting that President Trump has said that these conversations with China were happening. China has denied it a couple of times already, but now we're hearing that China is currently evaluating the possibility of those trade negotiations going forward. Take a look at how we're setting up early in the Asia session, given that China is away on holidays, but we're watching the Nikkei now gain more than 1%. We have continued to see gains for the Japanese stock market, the longest winning streak since January of last year. We're hearing after the second round of trade negotiations between Tokyo and Washington that leaders will be expected to announce a final deal as soon as possible, according to a foreign ministry official here in Tokyo. We also heard from Japan's finance minister Kato that Japan is considering U.S. treasuries as a card in ongoing negotiations, not necessarily that they will use it. We are headed towards Australia elections. There's a lot of news. Bear with me. Kospi, though, down 0.25% because the finance minister just resigned hours before becoming the interim leader of that country, Haidi.
Happy Friday, Shery. I've got no shortage of things to talk about.
We're
but of
going
course,
out
what
with a
we're seeing
bang.
at the moment when it we are. That market reaction to, you just mentioned, of course, is headline that China is currently evaluating the possible trade talks with the US. We're seeing that market reaction. S&P 500 futures are raising the loss. Australia's ASX gaining, raising that year-to-date loss as well. And, of course, that reaction in the yen as well. So let's bring our China correspondent, Min Min Lo, joining us for more from Hong Kong. And, you know, Min Min, it's interesting. It was only yesterday that we had even China via state media, CCTV, acknowledge that the US had reached out. What do we know so far in terms of what Beijing have really said today and how that could pave the way forward for potential engagement?
Yeah, so the Chinese foreign ministry actually confirmed what we saw from Chinese state media, a social media post yesterday suggesting, according to sources, that the U.S. has been reaching out to China via various channels. And I think you can see this as China trying to seed the ground for potential talks to soften sort of the atmosphere for it, especially for the domestic audience, to make it sound like at least it is not China being the first to reach out here. The Chinese social media post yesterday saying saying that the fact that the U.S. is reaching out first shows that the U.S. is more anxious here. And the Chinese Foreign Ministry confirming that they are now assessing possibilities for talks. It is still calling on the U.S. to remove all unilateral tariffs and calling for it to correct its mistakes. And from the Trump side, we've been hearing really different sort of rhetoric day by day. He has said before that he's going to be nice to China, but he also said that the U.S. is not going to unilaterally lower tariffs as well. He says any deal will be on U.S. terms. So it's kind of hard to read the tea leaves here in terms of what those trade talks will be like, and the timeline for it. It does look like something that the process is speeding up now in terms of what each party can offer to the other. That's still, there are really infinite possibilities for that.
And in the meantime, we're already seeing the business impact, right? I mean, we're getting big tech earnings. We're watching those Apple suppliers, and the cost of tariffs already been estimated at pretty high.
Yes, Apple is saying it would cost the company $900 million in the third fiscal quarter to bear those tariff costs. And for Apple, we saw its sales in China missing estimates in the second fiscal quarter ending in March. And there are a few factors at play here. Number one, of course, China has been a major production hub. And while it's managed to get exemptions for the imports of electronics from China to the U.S., the tariff risk undoubtedly is still very high, especially given the uncertainties around how trade talks will go. And when it comes to the Chinese market, there is intense competition there from the local players like Xiaomi and Huawei, where we have seen pretty innovative designs, the foldable phones, while Apple is seen as pretty much a laggard here, especially when it comes to the rollout of AI services, which is still not available in China. So a lot of challenges going for it, especially in the Chinese market, and also given the broader trade uncertainties as well.
Amazon too provided weaker than expected forecast for next quarter for operating profit. There's a big element here of China tariffs for Amazon too.
Yeah, of course, because Amazon is an e-commerce player already. It's being affected by the lifting of the de minimis exemption, and the company recently came under fire from the White House for considering to put or display those import charges on its platform. And since then, the company has said it will not be doing so, but undoubtedly it is having an impact. We saw the first quarter earnings actually meeting estimates, but the forward guidance actually looking pretty weak. The company gave a wide range there, suggesting there's a lot of uncertainty, and the company is citing things like tariff and trade issues, as well as potential recession risks. And bear in mind that the company sells about a quarter of its products from China, or originating from China, and it also has this low-cost platform called Haul, which ships products from Chinese warehouses. And if many of these Chinese suppliers do decide to pull back, it's going to have a major impact on Amazon's logistics as well as its ad sales revenue, especially if the smaller and medium-sized sellers start to cut back on their spending as well.
We're seeing that impact on sentiment as well with some of these PMI numbers. I'll get to those in just a moment, but Bloomberg's China correspondent Min Lo. But take a look at the readings that we see for the S&P Global PMI numbers for Taiwan, for example, the manufacturing PMI falling to the lowest since December 2023. For Indonesia, we're seeing that decline to the lowest since August 2021. Some of those declines being seen for the likes of Thailand as well, deteriorating, Malaysia as well as the Philippines being only one to see an improvement there. Many of those now in contraction. And of course, we continue to look to the details of the statement that we've had from the Chinese Ministry of Commerce and these remarks when it comes to US-China trade consultations. Some pretty strong language still of defiance from Beijing's side, saying that China's position has been consistent. If the US wants to fight, we will fight to the end. If it wants to talk, the door remains open, but that this is a trade war that was unilaterally initiated by the US. And if the US wants to negotiate, it needs to demonstrate, quote, sincerity by correcting its wrong practices, such as these unilaterally imposed tariffs and taking concrete actions as well. So they have made note of the recent signaling that we've heard from President Trump, from the likes of Scott Bessent, about possible adjustments to tariff measures. And the Chinese response is that in any potential dialogue or any possible talks, if the US doesn't correct these tariff measures, it would indicate a complete complete lack of sincerity and further undermine mutual trust. So, Shery, it's quite interesting. They're basically saying you can say one thing while doing another, and that's not going to work with China.
Yeah, I mean, we're in the thick of these trade negotiations, right? I mean, China just starting to look at the possibility of starting negotiations, but we have Japan, South Korea ongoing. We have heard from the second round of trade negotiations between Tokyo and Washington, and a ministry official from the Foreign Affairs Ministry coming out and saying that the leaders of these two countries will be expected to announce a final deal. They're hoping to make it as soon as possible. The chief trade negotiator, Ryosei Akazawa, spoke to his counterparts for more than 2 hours, saying that the currency and national security issues were not raised as topics, and they did not discuss China specifically in bilateral talks either. You can see right there that the Nikkei is gaining now for an seventh consecutive session, the longest winning streak since 2023. This is Bloomberg.
Take a look at US Treasuries. There's been an interesting ride so far this session. Of course, we started out with Japan's Finance Minister Kato saying that US Treasury holdings could be used as a negotiation card as we hear of more progress when it comes to these talks being held between Washington and Japan. But at the same time, we're now seeing that move potentially reflecting some market hopes that with the statement out from China about potentially evaluating US-China trade talks, that it kind of adds to a bettering of the global mood music when it comes to trade, right? We also heard from the Treasury Secretary Scott Bessent overnight saying that the Treasury market is signalling that the Fed should lower interest rates, signalling that the Fed should cut. He argued that the 10-year yields have retreated since Trump took office, and that the drop in 10-year rates is, quote, saving the federal government lots of money in terms of interest costs. So there is clearly a lot going on today as we head into the weekend, which of course also holds two elections in Australia and Singapore. For more on all of this, Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now. Garth, let me get you started, of course, with the latest statement from China. What's really been interesting is if you read into the statement, it's still pretty defiant, saying, well, you know, we'll only talk if you admit to your mistakes and undo these tariffs.
Yeah, oh, very much so. But I mean, I think what investors are picking up on is they got scared out of this expectation in the initial bewilderment created by the Liberation Day announcements on the reciprocal tariffs when everyone was trying to work out how do they come up with these, how does anybody negotiate on this basis. So that scared everybody. And in particular, investors had to drop for a while at least their overall expectation when it came to tariffs, which was that President Trump would push for tariffs, would talk a big game on tariffs, but ultimately the hit to economies globally would be manageable, and that it would not, as far as US equities in particular, but also potentially as far as economies in general, it wouldn't be so bad that it would overwhelm the expected boost to US activity from the tax cuts and deregulation, which were also a major part of his platform. So what we have now is investors looking for anything that can feed the theme that the tariffs will not be as bad as have been feared, and in particular, every softening in the US posture and apparent softening, or at least moves towards talks from other parties, increases the chances that the reciprocal tariffs that have been delayed will go on being delayed. So that's when you look at places like Japan, Europe, Korea, and that there might even be some delays in what's been imposed on China. That would be the next step. And it would be very much from the president's playbook so far, which has been to delay or offer exemptions temporarily for tariffs when that seems to be in his interest. You think of the Apple exemptions, you think of what they came up with auto. So that's what investors are looking for. They're not they're not looking for the idea that suddenly tariffs will disappear, but they are looking for the idea that the 10% base doesn't get added to when you look at reciprocal tariffs, and that there could be adjustments to the sectoral tariffs that have been imposed.
At the same time, though, I mean, the whole narrative that we saw unfold from last month, the Sell America trade, now with Japan saying that U.S. Treasury holdings are in the cards, although not necessarily that they would use it, but yes, when you're negotiating with another country on what sort of tariffs and what sort of outcome you want to see here, does that really wane the appeal of U.S. assets long term, this uncertainty and back and forth that we're seeing from the Trump administration?
Oh, absolutely. If you look at where the US dollar in particular is now relative to where it was back before the inauguration, and in particular, the expectation had been that tariffs would add to US dollar strength. And in fact, that was to some extent sold by Treasury Secretary Bessent in particular and some others as part of the reason why the impact on the US of tariffs would not be so extreme, because other countries would devalue their currencies or allow them to devalue, and that would therefore mean that the hit to actual US consumers and US businesses wouldn't be so severe, because the tariff is effectively being paid by those other countries through them devaluing their currencies. That hasn't been happening. That might be part of why the US officials have sounded very, very keen on the idea that deals will come. And in fact, China has put forward the idea that the US is sounding very keen to reach a deal, sort of emphasizing that maybe China is not so keen, precisely unless they get a decent deal. So that US dollar situation is a concern, and there is still an underlying concern, especially if the US data sours going forward. If we get the real data coming in showing that there has been damage, you could see a return to that Sell America trade across broad assets. But for now, there's plenty of optimism that the situation will end up being less existential than had been feared.
Bloomberg's Garfield Reynolds there with the latest on the market moves. With us now is Christopher LaFleur, chairman at AmCham Japan, for his views on how these businesses are reacting to the trade environment right now. Christopher, good to have you with us. I mean, we're talking with Garfield about this uncertainty coming from the U.S. administration. What does that mean for businesses trying to really continue business as usual here in Japan?
Well, as I'm sure you and your audience know well, Japan is a tremendous market for American companies. And in fact, the U.S. enjoys a trade surplus in services with Japan that's substantial, but certainly insufficient to make up for the large trade deficit in merchandise goods. So we've been following the negotiations very carefully with a view to hoping that the two governments can reach agreement quickly and that trade can continue to expand between the two countries as it has been.
I think that's a hope from businesses around the world, but the fact remains that we haven't seen really a lot of details on what these negotiations have entailed. I mean, we've seen reporting about more soybean imports from the U.S., corn imports, safety standards being relaxed here in Japan perhaps, but nothing concrete. Are you hearing anything different in the U.S.?
No, I think it's obvious that Japan is a major market already for American agricultural products, one of the very largest in the world. And so it's clear that there could and probably should be opportunities, further opportunities for American agricultural exports to Japan. But of course, there are a number of other opportunities as well. And we've heard, as I'm sure you have, the opportunities and potential for greater energy exports from the United States. We know that pharmaceuticals make up about 10% of U.S. exports to Japan, merchandise exports. And there's certainly room for further growth there if Japan can adopt the policies that will encourage that kind of investment by American companies in the market. So there are plenty of opportunities here. You touched on autos a second ago, I think, with respect to safety standards. Certainly trying to harmonize standards between the two countries would also create greater opportunities, and particularly looking toward the future, ensuring that as automotive technology advances, that the standards in the two countries are compatible, I think would be very helpful to us going forward.
Christopher, aside from the sort of hour-to-hour, day-to-day potential progress being made, the concern with this sort of tariff war is that confidence becomes, or lack of confidence becomes entrenched, right? Are you hearing much from the membership in terms of whether they're waiting and seeing, or whether they're having to make some of these harder, strategic changes and investment and spending decisions that may be quite hard to reverse, regardless of what progresses next in these negotiations?
Well, our membership, of course, is our American companies operating in Japan. And Japan, we fully expect, is going to continue to be such an important market for the United States that I don't think it's had a significant impact to date on investment decisions. And indeed, I think a number of American companies see increasing potential in Japan, whether it's in pharmaceuticals, as I mentioned, or pharmaceuticals or aerospace. So there's lots of opportunity in Japan, a big economy that U.S. business certainly, particularly in this day and age, when the situation in Asia is shifting, Japan has got to be a central focus for foreign investment for United States companies.
You've, of course, held various senior diplomatic roles throughout your career pertaining between the US and Japan. Do you feel that this tension at the moment is sort of a blip in the ongoing landscape between two very strong traditional allies, or do you think there will be sort of ongoing takeaways even if the government, in the next few years does change on the US side or on the Japanese side?
Well, let me say that the U.S. Chamber has just recently had a small group visiting Washington, D.C. to talk with U.S. government officials. And preceding that visit, we also had an opportunity to dialogue with a number of Japanese business organizations and Japanese government officials. And our impression, I think, was that both sides are entering this dialogue with a fairly high degree of confidence that a good outcome can be achieved. The U.S.-Japan alliance is certainly at its strongest point historically. And as I just pointed out, from an economic point of view, it's an absolutely vital relationship for both sides. So I think my impression is both sides are entering this to make a deal, and we have high hopes that one will emerge soon.
Christopher LaFleur, Chairman at AmCham Japan, always great to chat with you. And more ahead on the Asia trade, this is Bloomberg.
Take a look at how futures are setting up as we head towards trading in Taiwan. We know that China's away on holidays, but we'll be watching, of course, the latest lines coming from Beijing that they're assessing the trade talk possibility with the U.S. They're evaluating those possible negotiations, but they do want the U.S. to show sincerity if they want those trade negotiations. Haidi, U.S. futures gaining at the moment.
Yeah, take a look at how we're tracking across the rest of the region with so much news flow, and the latest of which is obviously sort of that cautious optimism that the door is sort of opening for trade talks between the US and China, the most contentious and the most conflicted potentially out of this trade war. You're seeing dollar yen seeing a little bit of a breather there, dollar China looking like this. We'll be watching the fixing today, but generally looking a little bit more risk on across the region. This is Bloomberg.